What's going on, everybody? SmartHelping.com here. We are goaling today to finish this equipment rental model upgrade. It's the third most downloaded template I have. It's one of the older templates I've built from 2017, I think, maybe 18. We've done a lot of upgrades here. We're integrated a full three-statement model with, which is basically formal financial statements. We've added a cap table. We've added more depreciation logic, um, potential for the exit valuation, terminal value. Originally, it was just kind of like a cash flow model. It didn't have a lot of the more advanced summaries. Now it has everything. And I've also updated a lot of the naming or formatting conventions. We are going to try and finish this up today. So mainly what we're going to have is adding a contribution distribution schedule. This executive summary is going away for a new one, so we're going to clear all this. And I mean, this was a really great model as it was. I mean, I've had no complaints about it. I've had a couple people want some different customizations, but it's had a lot of sales and no complaints. And all I've done now is just made it that much better. Um, the base assumption of how it works is you can define, up to like 100 different tranches of equipment purchases, what the cost is, the purchase month, end month, and then the utilization per year. Also, any cost that's related to renting it out versus returning it, and the frequency with which you rent stuff out in months. And this is the whole thing that drives the model. Other things that are just kind of ancillary wrapped around it would be startup costs. The CapEx is completely derived from the purchases assumptions. You're just defining useful life here. And the building in the top row, if you're buying a building. Terminal value, and we were just testing. I think we ended up testing the terminal value working if we have it at no terminal value, and we got it all sorted. Cap table, and then now it's got a more formal income statement. Before it was just kind of a cash flow. Now we've actually got proper um, items. So today the goal is to clean everything up, get it all formatted. Um, Before I jump in, first of all, I did have somebody in the chat yesterday and I missed their message, so I'm going to try and get this back up so I can see if people say stuff. Don't forget to subscribe to the channel, like the video. Check out smarthelping.com if you want to purchase templates. I've got all kinds ranging from $45 to $175. I've also got bulk discounts by category and volume. All kinds of different templates I've built over the years. And I also offer pitch deck ready financial visuals and the general three-statement model, which is the base template I'm using for all these upgrades. These are free with any purchase, so just ask me about it. Or you can purchase one of these or both, and that comes with any $45 template for free. All right, let me get this set up, and let's do a sound check. All right, so make sure I can see if somebody says something. Okay. By the way, it's snowing a lot here today, this morning. We're getting dumped on. Let me get to my YouTube real quick. Let's see. Live test. Okay, sounds working. I can see everything. So, I'm trying to. So first, I'm gonna start doing these coloring updates on here. So let's make this the same. Let me just see what shade of gray. So it's 2 down. Okay. We're going to get rid of all this blue. Make all these titles the same color. A lot of the stuff about making templates professional is consistent formatting. And also text, so font, so I'm bold. So these are bold. Okay, that's better already. Now we could do the top here. And then the big one is going to be on the P&L detail. Yeah, we got to get rid of all this blue. And then I'm going to test having to end month in different years or middle of the year and just make sure nothing breaks the model. And then we'll go ahead and update the spacing on all the financial statements. I'm really excited to get this out because I'm sure I'll have a purchase of this, soon, and I'm excited to see and get feedback on it. So I really want to finish this today. And the link will be in the description box. And all my tutorial videos, there's links to the templates in the description. And while I'm doing this, I can talk a little bit about if you're trying to get into the financial modeling industry or finance in general, the more you know and understand about finance, the better. And then the better you become at Excel and logic structuring, you then amplify your value. Because it's really important to know different things about financing structures and just general accounting knowledge. That's very valuable. And then being good at building stuff in Excel or Google Sheets takes you to another level for being valuable. And then you just go out there and usually I used Upwork to start back in 2015, and I just took any job I could, and I've got, I don't know, 400 jobs I've done, and then now I kind of just stick to financial modeling, but I did everything, all kinds of different things before in Excel and just data modeling, format or aggregating, summarizing data, tracking stuff, and it all just helped allow me to know more about Excel and what can be done, and then you take the finance knowledge and then you kind of mix that together, and then you get to help people who are bad at math but good at finance build good things, and you get to help people who are good at math and bad at finance to model things correctly. So it's cool. All right, so formatting done. Let's figure out, let's make sure everything works. So right now I just have NA selected, so this means the model just runs into perpetuity. The loans just go to the last month and they don't get repaid, they just show a balance. Uh, we want to check. We want to check all our checks, and I'm actually thinking about doing a. So do I have a check here? No, I think I just did on the annual. A global check that says what's the sum of all the checks. You know, like check summary, and then show if it's zero or not, so then you can easily see from the global tab what is not balancing. Right, and yeah, I think that's a great idea. I'm actually going to add that in here instead of manually going. So this one's on the annual check. We'll put this here. Actually, yeah, this is a great idea for, we'll add this to everything. So this is annual income, annual net income versus monthly. Might need to extend this. Okay, so that checks out. What's our next check? Oh, you know what a good one is? Just summing up the entire check row of 152 on the balance sheet. Balance sheet, and that should always equal 0. And like we saw on yesterday's stream, you could have a monthly balance, but not the annual, which happened yesterday. Get this justified to the left. Balance sheet monthly, balance sheet annual. It's a and this is really good because if you instead of going through and manually looking through the workbook at all your different check values, you can just get it all right here. Cash flow statement, I don't think we did any checks on that. I know we did in the monthly, either the monthly or the annual, there's a couple checks. The annual it must be. So this is here, and see we got a check error here on the balance sheet, which I'm not sure what that is. We'll have to see. So those are the last checks we have. We'll have a couple more when I add the distribution tabs, but uh, let's see what we got going on here. I don't want to go into the distribution until I figure out all these, make sure these checks work with all the different timings, and then we can add in distributions. And then we should be getting close then to the formatting update with the rows or spacing. Annual, just make sure what I called that. Annual detail. Check against monthly detail, and then also check against balance sheet cash flow. Put these over one more. Happy Friday, by the way. This will be my last stream until Monday. Streaming every day at 10 a.m. during the weekdays. It's great. I love it. Getting a lot of production done. I got through the full SaaS model upgrade and this equipment rental, so 2 a week. That means if I've got about 60 to do, 30 weeks. What's that? 7 months roughly. So that's checking, making sure the monthly and annual cash match, and then this is checking that cash balance against the balance sheet to make sure they're connected right. And here we do have an error. So the question is, why is this 0? What are we missing? 175,000. So let's go and see what this is. So this is ending cash balance against balance sheet annual L11, which is the cash balance. Right there. And so we're off by a little bit. So let's see what could possibly be the problem. And remember yesterday, we had a circular reference error in the model for the entire model. It was crazy. I finally figured it out, and it was just um, some formula or some data that was in or referencing, and it should have been cleared out, but it was referencing another tab and then checking or referencing itself. Yep. So this looks like number one, our cash balance here should be 0 at some point because we're solving for the minimum cash needed. So this should go to 0. It does not. And we had this issue on the last update we did, or the last one we did. So I want to see what, if anything, we're missing here. So because you see, if we go to the monthly detail, this running cash position against equity should equal 0, and our equity in, let's go to the cap table, should be 2.4. So the cash balance over time, if we just do this, monthly cash flow plus equity, and then this plus this, and this should match our cash, essentially our cash position, and it should show a 0 balance because that's, again, what we're solving for. Oh, that's too high. Monthly cash flow. Yep, and there you can see in November 2022 we go to 0, and then we start going positive. And you see that 2,000,004 negative balance is our equity needed. So, question is, number one, why does our balance sheet not show 0? And number two, we're out by 175,000, so we got to figure out what is happening. And these are, I mean, every time I've done let me get this back up. Anytime I've done a financial statement in Excel, there's always, it never is perfect rate on the first try. There's always stuff going on. So let's see what could be the problem. First, I'm going to look at net income and cash flow. So see, this includes the equity, selling company stock. That looks fine. So this is just taking the cash flow. So really what we can do is measure this net change in cash to this, our monthly detail. And see what's the difference. Obviously, we know the equity is going to be different, so we can add that into here. So that's still off right there. So we're still out by 98,000. So something's definitely 98,721. Is that the principal payment? No, that's too much. 1270. No, that's not it. So what could it be? 98,000. Well, we look at each piece. So operations, we have negative 529. Operations here. Let's try and see. We'll have to manually calculate it from EBITDA. This, and then we're going to minus startup costs. So 527, 651. What this? How is that? 527, 651, and this is 529. Taxes 1278. Is that what I was out here? Can't be. 1278.86. Okay, so our taxes are the problem. So and this is, I mean, when I used to do like formal accounting work for a CPA firm, you always want to show decimals, and you would always look for a value that you were out by, and this is, if you're in accounting, you know this, but so we know taxes, so this is an issue. Either we're double counting it or didn't count it. So that 1278 should be included somewhere here, and it looks like we actually never brought it in at all. Is there any taxes on here at all? No. So that's an item we got to put. And this is again why if you're financial modeling, you have to do checks. You have to. So you can figure this stuff out because it has to match. So we can just go to the cash flow statement and pull that tax amount here. And that's going to be part of the monthly cash flow. We could just extend this. So this is probably where we're out on that 175,000, I imagine. The other curious thing though is the balance sheet not going to zero. So we'll have to see about that. And obviously, taxes are paid the following year on the money made, and it's quarterly, but we're just essentially amortizing out the taxes. We're not getting too complicated with that. So shoot, now, well, let's add this to the annual. Now we're going to be out by, I think, quite a bit more. Because that's $3 million worth of taxes that weren't in here. Yeah, now we're up by a lot. So we'll have to see what that is. 3 million. That, I mean, I guess even the total equipment purchases don't even equal that. make sure I didn't already count. I don't think it's anywhere else. No. $3.2. Let's go over to our CapEx. So this shouldn't be coming through to anything because it's not being sold. So let's double check. I'm pretty sure I put logic in. Yeah, it's not showing up here. Make sure it's not showing up on this. No, it's not. Okay, good. So that's not it, or contributing to anything. Okay, so here's what we do now. So we go back and figure out what we're out by. Again. So now we're at 1.7. Where's my check? Cash flow. Did I do it on here? Ah, here. Okay. So now it's out by exactly 100,000, which is it's got to be something to do with the debt. Are we not looking at debt proceeds here? Total debt. Funds from financing. So this is out. Let's see what the formula is. Sum D7, if that equals the date. So this is going to be about 400,000 of it. D7 to D10. Oh, okay, so this was moved. So this needs to be 12 to 15. Twelve to 15. 12 to 15, and then you get rid of the reference to the tab name. All right. And so this equipment rental, it's had a lot of cleanup, and so the more cleanup, the more things move around, the more chance for errors, the more you need to check. All right. So now the question is, let's go back to our cash flow. All right. So we matched for month 1. Let's go to month 2. 112. Okay, that matches. That matches. Let's just drag it through. It looks like where's our error? So this all matches now. So the question is, how are we out? Okay, now we're up by 1.6 million. 1684. In reality, let's see, am I going to ruin anything? Yeah, see, so this cash flow cannot include a reference to the equity contributed because this is used to determine what equity is going to be needed based on the minimum cash position. Okay, good. So 16. So after I just did those updates, the min cash position changed 1684, and that's what we're out by. So that's good. That actually checks out. So we're good now. And that difference is the equity contributed. So this check actually has to do this. It should be this cash balance minus the cash balance of the balance sheet plus um, or yeah, essentially owner's equity, which is now, see, it's now 1684 after updating that. So before, the cash flow model we were using to determine the minimum equity needed was not including all of the financing that we had entered into the global control tab. So now that that's entered, okay, you're borrowing some of it, so you don't need to come up with this much on your own. Perfect. There we go. We are balanced. We don't need this in here. And we don't need this. I love it. That feeling, that right there, the feeling of just balancing your balance sheet or figuring out a check, you really feel good when you do it. Keeps you going, and if you're an accountant, that's the the best feeling. All right, let's update some things and see if we stay checked, all checked. So what if we have an end month in, let's say, November? Oh, oh dear. Oh, look at that. We are not balanced. So what in the world? So we ended November. Um, we got a multiple in there. Okay, and it could be a reference, but let's go. So now our balance sheet's just completely out of whack, and it's probably the last month. Let's go over to there. Something with the X, yeah. So 1.787 is what we're out by. We have to figure out where that issue's coming from. This is zeroed out. This is zeroed out because those are being sold. Okay, I know. I know what it is. So we didn't do this yet. So on these amortization schedules on the payoff month, if there is an exit month, that means that all the debt has to be paid off on that month. So we have to put in that, which is just going to be if our date here equals this month, then the actual payment we're going to do is the remaining balance plus interest charged for the period. So this divided by 12 times the previous balance. Otherwise, go and do the regular formula. So we got to update each of these payment formulas for that. And now we should see, yeah, there we go. Payoff on the last month. So now we can just copy this over into each of these debt schedules. Looks good. Now this value error, we don't use this at all. This is unused column. Alrighty. Now let's go back and see where we are on the math. We might still be out by something, and if it is, it's probably something to do with the CapEx. Okay, looks like the same number. So I guess that didn't matter because it was just assuming the balance was greater, but it didn't actually affect the balance sheet. But now, right, long-term debt, this is paid off. So 1787,871. What is that? What is it? Not taxes. Well, let's see what else is off. So our cash flow on the monthly doesn't match either, but that's a different variance, 478. Let's see what that might be. That's all coming through. Oh, are we getting the loan? Yeah, the loans are all being paid back here. All right. Well, we go back. Now, we know the variance in our balance sheet is the last month, so let's just look at what's happening here. So, even though we know all these taxes hit in this final period, we're amortizing them out, so this is why this is negative, but it's not an issue. The net change in cash. All right. Let's. What's our monthly detail tab say? Okay, so there's our. I think that's our. That's 478. That's the variance right there. So it's in the final period. So let's just go look through each one. Um, Principal repayment 656. This has 659. Slightly different. I don't actually know how that's possible. Let's see, DQ 209 to DQ 212. So 656 903, and then interest 27. So is one of these not counting the interest for that period, monthly period? I guess. What's it? 656 903. 659. Okay, so this, I think that's not an issue because this is just principal. If we add the interest, 659, 640. Okay, so that matches, so that's not the issue. What else? Sale of business 9574. Sale of depreciable assets 728. What do we do here? Sale of business 9574. Oh, I think I know what the issue is. So sale of depreciable assets 728. We don't have that anywhere on this. Although this amount should be the total that includes both of those amounts. 9574. Actually, this should be including both of these. What's this? 10,303,000. How's that 10,303,000 if the total exit value is only 9,574? So that's something odd. I4 terminal value D10 478. Okay, that's our issue. I think that. So see that 478? I think that's what we're up by on the other one. On the monthly cash flow or monthly detail. Well, I'm trying to figure out why this is negative. It's doing this divided by all of column I. Is this negative? Oh, it is. Okay. We could have a HLOOKUP issue. That's probably what's happening here. The HLOOKUP. This should be pulling the value on the balance sheet on the last month. So how is this negative? Machinery 1. Yeah, I think it's pulling this, so it's a HLOOKUP. So that's an easy fix. We just go minus M4. We're going to put an index formula in here instead. Actually, I guess it doesn't matter either way. So 5 to 17, comma A 413. So that's right, but balance sheet 5 to 17. So 5, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it should be 12. Or no, it should be to 16. 5 to 16, and then it should be 12. Right, 16 minus 5, 11, 12, yeah. It should be 15, 11. Okay, what in, and then drag this down. Five to 26 minus M. What's happening in M? Oh, accumulated depreciation. Months of use. So this could be something, because I remember this, I knew this was going to be something that we had to figure out on the CapEx. One sec. Sure. Just made the, somebody bought employee scheduling template. I gotta tell them it'll be coming in a minute. So, yeah, I know exactly what's happening here. We've got an issue with the timing and the accumulated depreciation that's happening. So this end month, I did min between the end of depreciation or the terminal value. So like in this case, it's saying it's fully depreciated. How, however, so it's fully depreciated by year 7, which is not October 29. Wait, we're starting 2022, so 22, 23, 24. That's like 8 years. Oh, but I had a staggered start month, so I guess that is, I think that is 7 months, or 7 years. So now what do we do here? Min of E-date. Because this can't be, this is definitely the problem. What in the world could be going on here? Min E-date. So the month of expenditure, comma, that times 12. Right, so that's the full depreciation period. Otherwise purchases E15, which would be if it's discontinued early. Now here's where we're getting an issue. What is the value before we subtract out this 60? Okay, so this is all off by 1. Hold on, this is off by 1. Screw this. I'm doing index. I'm done with HLOOKUP. Index. All I want is this match the end month comma here and 0. Okay, so it looks like the number we actually originally had in there was the right one. Just maybe the formula got messed up going down. We'll see. So this is saying book value is 0 for everything because it's all fully depreciated. Our value at sale is the total amount that's being applied to fixed assets, 478. So it's all going to this first one. Because that's the only thing with the book value. Pulling this up actually. Whoop. I don't know what the heck that just did. Get a line style back in here. Okay, so this looks right, and net gain or loss is just whatever book value is left against that. Essentially, and all we want to know is the aggregate. What's the total book value here? What's the total amount we're applying to it for the sales proceeds? There's the net gain or loss. Now, let's say the useful life on this stuff was like 11 years. See, you now have value here, all the book values, there's some left. Here's the amount you apply to each against that sales proceeds, and here's net gain or loss, and there's taxes. Okay. So if there's no book value left, then the gain is just the total, you know, the total amount. There's nothing to offset a cost if it's been fully depreciated. This logic is tough. This is hard logic, but we've done a good job here. This feels good. Let's go back to our checkers. We're still up by 478. Okay, so this is good. So what I just did, updated the balance sheets now so that the only thing we're out by is the amount of this here, right here, this value. So something is including it and then something is not. Where is balance sheet monthly? And it's in the last month. So in theory, it should be part of the cash flow coming in. And then the other side of it would be believe the sale of the equipment going away. So let's look at the cash flow statement monthly. So we got 728, which is the 428 plus the sale of the building. So that's in there fine. See, this is where things get so tricky. So the question is, what do we miss? Where does the other side of that transaction need to go? This 478, what is it? Essentially, it's a part of the terminal value. So we want to do 9.5 million, but 9 million in essentially taxable income, and then this is for the applied fixed assets. Oh, I see a message. Thanks. No problem. You're welcome. I don't know what I'm being thanked for, but you are welcome. All right, where were we? 478. So either we're adding it twice somewhere and only once somewhere else. We only want to obviously have it hit one time. Let's see what's bigger here. Which one? Assets are 18.6. So liabilities and equity is what's lower. Um, is it retained earnings? Maybe somehow it's showing in the cash, but it's not showing in retained earnings. That's possible. Drag this a little bit over so I can see the chat better if I need to. All right. Oh yeah. Okay. I think the problem is it's retained earnings, which is going to be a function of this net income calculation, which does look at the capital gains or CapEx. All right, so it's the last month. CapEx J106. I think that's the amount, right? 537, which includes both of these. Where is this 478 missing at? And this is another thing where on the SaaS model, I didn't have to adjust the CapEx tab. I didn't have to drag it down to 100 rows. And since I didn't have to do that, there was no, our error. We didn't have this error. But now we've adjusted it, so there's some formula somewhere that we gotta figure out what happened. So this is terminal value minus the amount applied to fixed assets. This is fixed assets including the building. So when we go to calculate this, I looked at that there. Let's look at our income statement annual taxable income. Man, what could it be? And these are, I mean, this is it. This is the hardships. You know, I have no idea where this error is. It's got to be somewhere. If we go look at the monthly again, that's out. Actually, what are we out by on the monthly? It's the same amount. And so this is pulling terminal value D7. This will be the easy one to fix. So terminal value D7 is that. It's and then the sale of the building. Actually, this could help us. So that and that we got 9,824,000, which should just be the 250. Just this plus 250,000. Yeah, 9,824. So that I think our monthly is actually correct. And somewhere along the line, we double counted our 478, 722. No, wait. 9,632,000. Let's see if we can back into that number. 9,632,000. Which should be all of these, right? What? So sale to business here, 9,095,000. We can check that off here. Yep. And then 728 for rest. Okay, so what's this out by? This is just a net gain or loss. So this is just used for tax purposes here. And then when we go to actually figure out the net income, let's see, does that make sense? I don't think we're supposed to do 178 again. So we're adding 178 to net income. Okay, we're going over to our SAS model that we've completed that definitely balanced, so we're going to check that calculation. It's going to be harder because we don't have the same reference positions, but I think we can still figure it out. So first of all, okay, that did look at this. Let's do a same example. So we end, well, this assumes it ends the last month. So what did we do? That. Well, it doesn't help a ton. See, terminal value is 7,236. We're doing 6,874, which is that, and then the CapEx, we should be doing the net gain of 519. Yep, that's right. Shoot, I was hoping to be done with this by 11, but we're not there. We're definitely not there. It's gonna take a bit. So we know exactly the number we're out by. We know what it is. I just don't know how it got referenced wrong. It's this total cash received from the fixed assets. Let me just walk through this in my head. So this is looking at EBITDA less interest less 75 nothing less 181 taxes minus depreciation plus extraordinary income from the sale of business plus net gain or loss. So this is just the net gain or loss plus, oh, is it adding that twice? We're adding J106 and we're also adding this if the date matches the end month. What happened on the SAS model that wasn't not an issue? Plus 57 plus J20. Oh, we were one off. So see, this is only if it's a loss. We're adding the loss in there to account for. Oh my goodness. Okay, so J106 here should be J107, I believe. Oh man, that's frustrating. No, no, J106 is correct. That's 0 and J105 is the actual gain, net gain or loss. Dang it, I thought I had it. Keep working here, keep working. Okay, so, okay, that's taking all of this here, and then if there's a loss, and it's taking that loss. So that makes sense to me. The net income or the income statement is not should not be including any total value of the sale of fixed, only what's income. The the cash flow statement is then capturing the total. Let's go to our SAS model here. Just trying to find any kind of incongruency that will lead me to the solution. Now here, 7.6, okay, I think we might have incongruency here, hopefully. So on the SAS one, it's 7,636,000, which is the total proceeds from the sale, which includes the portion for that and that, which is just 7.2, and then the net proceeds. So 7,236. So let's go back to our rental model. This is too high, 10,303,000, I believe. Yep, that's it. Okay, so that's our error. Thank goodness, man. Let's fix it now. So we got somehow we got 478 in there twice. And let's see how. So if and that the terminal D6. We're doing terminal value D10, which what is D10? I think yeah. D10 is, let's look at what the formula is on the SAS again. That's our issue right there. So I've got terminal value D10 here. Hold on. D10 plus CapEx H3, which is building sale. So CapEx here, amount to CapEx plus H3, which is a building. So okay. So the formula is the same, but the value is not right. Terminal value D10 plus H3. Where's H? It's just adding these two. Which is set. Oh, hold on. Is our error in here? This could be our error. Oh man. Yeah, this should only be 900 or 9 million, not 9,000,005. So I thought it was what this is with this. This should just be terminal value D9. Otherwise, yeah, I messed this up because I did the whole calculation in here. And so 9.5, the sale of the, did I label it wrong too? No, sale of business. Terminal value D. D9. Okay, so here's the deal. I know exactly what's going on. In the sale of business, we only want to include we don't want to include the amount for fixed assets. That's a sale of fixed assets. So we only want the sale of business portion. So what we have to do here is subtract. Hopefully it's not a circular reference error, or else I'm going to redo a lot of stuff. We have to subtract where's the best way to reference this? I guess minus sum of all of this. Actually, no. Minus, oh, I think this is going to be a circular reference issue. Minus this. Oh, it worked. Okay, good. So this is the amount for the business, and the other part's for the fixed asset, which is right below that. And then those totals should equal, oh, this minus this, and then we want to go otherwise 0. All right, that was fun. Man, man alive. So I'll see all these errors are from adjustments I have to make because this template had to have different finesse or different. I had to finesse the formulas because it's just a different model. Okay, now let's go back over. We should match. This is why we do these tests though, because I can't get a template out there that has errors just when you update the formulas. Okay, we're all matched there. Good. Let's make the exit month actually a full year behind in 2030. Okay, we got a value error. Most guarantee I know what that is. This blank cell trying to be added or something. Let's see. This is probably a formatting thing. Yep. Yep. All right, so we can just wrap this whole thing with an if error. Make sure the formula's the same. Yeah. Whoop. Comma 0. Still got an error here. Drag this over. Okay, still got an error. From the cash flow statement. Okay, so it looks like it's just trying to reference a blank. So I'm going to do another if error. Oh crap, is this the end of it? Yeah. Alright, looks good. We're getting there. Man, what a grind. Balance sheet. Annual still has the same thing. Alright, retained earnings. So it looks like the same issue. It's just trying to add a blank cell. So we just do, since the model ends in that month, we don't need to see anything. Or in that month. Uh, 1684. Oh wait, year 10 is non-existent. What did I do in the balance sheet for this equity? So on this one, oh, because we have, it's automatically assumed to be the last month, so there's no issue with this one. But here we do have a dynamic end month, so I have to put let's see. So if it's midway through the year, it needs to be 0 or have a value. But if it's before, so I do, if the first month of the year is greater than the exit month, 0 it out. Well, we'll see if that works. These are all things that have to be done so that when the template goes out, the person doesn't have to worry about all this stuff. Wait, what the crap? What did I do? If this is... So we're balanced there. I think the monthly is balanced because it doesn't, yeah, it just ends on the month. I guess we could just, for clean purposes, make it zero out after that last month as well. All right, let's make sure nothing I just did messed anything else up. So we'll go back and we'll go back and change some more things. All right, so what if it's like midway through the last year? Oh, we got an error still. What's that on the monthly? Most of this has to do with this dynamic end month, but I think it's important to have that in there. Okay. So we're up by 16 million now. That's a big number. Uh, let's see why. $16,921,000. Wait, it's off by the exact amount of the total assets. How is that possible? What's our cap table look like? It's 1.6. It's the same. This minus balance sheet L11. How is that a 16 million difference? Doesn't make sense. Oh, okay. Okay. Duh. So this is just a actual. This is actually a formula error in the check formula. So we don't want to just do balance sheet the last month of the year. We have to do minus index. We want the balance sheet to match the year we're in. Or the year of the exit. And we always want to try to go back to the base input if we can. So the year would be this. And I need to do a formula in that. This actually should be, because these are actually dates, we need just the year formula. You can make that lighter text. And there we go. Okay, and that's actually something I need to do on this. Let's make sure the SAS check does that. If we have, no, won't be relevant again, because the exit is always assumed on the last month for this model, or for the, yeah, for the SAS model. Okay, I think we're good there. Don't save that. I do want to check what is our first one? Franchisor licensing. So we've got a three-statement model for the franchisor licensing, the SaaS, now the equipment rental, and also I did one for the lending business back in this last year when I actually built that one. Just want to see. Okay, so on here, I just want to see where did I check the monthly cash flow detail with the balance sheet stuff. Okay, it looks like I didn't. Let's do that real quick on here. You know, who knows? We might be out, but that's okay. So this minus index balance sheet annual cash flow if the year exit year matches the year over here. Let's go ahead and put the years in this one as well. I'm just going to do this real quick and test a couple of scenarios and make sure that this is balanced. It should be, but we're just going to check it anyway. Okay, and then plus the owner's equity. And I might have the check somewhere else in here, I don't know, but let's just do it. Okay, so control, we'll just put it in right here. This is the hardest check. If the annual P&L or cash flow detail matches the cash balance on the balance sheet, that's like the biggest check to make sure that everything is combined. All right, so let's try NA. NA, we get an NA error. Probably because that year doesn't exist. Actually, hold on, no, that should. Oh, duh, because it's trying to look up a value that's not there. So that's good. Okay, so we actually have to put an if error here. If error, then do n to 29 minus, and then it will be, you just do the last one here, it will be this last amount, because if there's an error, it means the exit month is NA, and that means the model goes through to the very last month. So we can just do this. Plus the cap table amount, which is equity. What did I do here? If error or ERROR. Value. Otherwise always do that. Okay, thank freaking goodness that matches. Let's try an exit month. Oh no, 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 no. So, oh, okay. I know what. When I did this, trying to think what happens. So 379. It's basically taking the entire. It's showing 0 here for the balance sheet amount. You see it's 382. What happened to 2030? This is still 2030. The values match, which is good. Let's just fix this formula. Yeah, so that matches. Why did this try and do this formula first though? That's weird. Okay, whatever. Let's test real quick. What if you do a year prior? Okay, and then that's. Let's get rid of this if error. It's only relevant when we're NA, and we know that worked when it was NA. Okay, so good. So this just goes through no matter what. It just flows even if the month ends earlier and it's the same amount and it matches. All right, that's good. So it passed all the checks we're doing right now on, so I don't need to save this. So the franchisor licensing model is good to go. We now are going to try to push through here. And one second, I'm just reading the email. About to have to eat lunch. All right. So, shoot, I forgot where I was on this. What am I doing here? So this. So we've checked. Oh, we made sure that worked. Made sure it worked here. Let's do the middle of the end year. NA. Dang it. Index. Okay, so this is going, wait, oh, I just didn't drag the formula over all the way. So you can see a lot of the issues just balancing the cash flow detail in with the three statement model. Okay, there, now it's balanced. Let's check back last month of the full year. Yep, good. And let's do NA is NA as expected because it's not looking up anything. However, it should. So we're going to say we've exhaustively tested the logic here. We're going to go if this input equals NA, then do M152 minus the cash balance at the end of the last year, because it's just going to go all the way through since there's no exit. This plus cap table D3. Otherwise, do the other. Okay, that worked. All right, now the moment of truth. Can it work when we update this to a date? Thank goodness it does. Do a mid-year, yep, and let's do a previous year. All right, we are all balanced. Awesome. I'm going to move this back to the last month of the last year. That feels good. So now everything is good to go. I'm actually not going to finish this template today. I'm there's too much to do, I think. So we're going to have to go Monday. Now Monday, I'm going to do the distribution detail, the formatting, and then I'll probably start on the next one. All right, guys, have a good one. Remember, check out smarthelping.com for over hundreds of templates, and subscribe, like the video, are free ways to help me or support